Let's move on and talk about the insurance sector. Now, the Finance Ministry or the IRDA has proposed a composite insurance scheme, which means a life insurance company can now also distribute general insurance products and vice versa. They had sought comments from the industry bodies by 15th of December. To discuss the way forward for the insurance sector and Outlook 2023, we will be now joined by the CFO of HDFC Life, Mr. Niraj Shah. Mr. Shah, morning, and thank you very much for joining in. First, if you could tell us, were there any comments which were given by HDFC Life on this composite scheme and the other amendments proposed by the IRDAI? And if yes, could you elaborate on it?
Morning, Yuma. Thank you for having me on the show. Yes, in fact, IRDA, under the leadership of the new chairman, had constituted multiple committees. We were leading one of those committees on development and penetration. And one of the recommendations was to broad-base our ability to offer more solutions to customers. This was one of the moves in that direction in terms of allowing us to distribute products of other financial services companies, as well as in terms of increasing the mandate from offering life to life and health as well, like the way it used to be a few years back.
Hi Niraj, so will you start distributing the general insurance companies or products, or will you apply for a new license? That's the general insurance license.
Yeah, so we need to still think that through in terms of how we want to really do this. There are going to be a few discussions here within the group, like it would be in all other groups as well, given the coexistence of both entities. We are very clear in terms of at least broad-basing our solutions. Currently, we offer it in combination with our health insurance sister company. And we will just think through in terms of how we want to, once this is available, we'll just think through in terms of how we want to make the offering to the customer.
Niraj, but you'll at least have a sense on which side you're leaning, right? I mean, you have a couple of options out there. And by when will you decide?
So it'll probably take maybe another few months, really. There are a lot of considerations on the table here in terms of distribution versus manufacturing, and in terms of at what scale do we want to operate, how are our customers seeing this, how is our distribution looking at it. So the multiple factors to be considered, but yeah, we should have a view in the next maybe a few months.
Niraj, hi, good morning, Prashant here. Could you walk us through briefly what are the considerations, as you said, with some detail? Yeah.
Prashant, if you look at it globally, there are multiple business models that are available. So you have monoline companies, then you have companies which have joint licenses as well. In different parts of the world, there have been different models that are existing, and things will develop in line with how the market is shaping. India is a very underpenetrated market compared to some of the geographies that we're talking about. So there'll be multiple things at play here. Health, yes, I mean, depending on the kind of business, it could be either seen as a long-term business like life, or it could be seen as a one-year renewal business like the way most of the business is being conducted today. So these are some of the things to be looked at. The capital requirements of the businesses would be different. So for composite licenses, a lot of those things would come into play in terms of what's the kind of overall picture, because these end up being different businesses with different kind of economics. So these are some of the things to be looked at apart from the group structure, Nishant.
From a group structure, you also have HDFC Ergo, right? Which distributes general insurance. So does it make sense to merge the two entities and now provide a composite scheme? And walk us through the pros and cons of this approach.
So, we discussed this last time as well. So not really, wanting to talk about specifics here right now, given that we are still very early stages of, this development. And like I had mentioned last time as well, I think both the companies are at scale. We are working together, and we'll have to think through how we want to really do this going forward. As far as we're concerned at HDFC Life, clearly we want to expand our product suite from Life to Life Plus Health. That is something that we are working on at this point in time.
All right, let's talk about other parts of the business then, Niraj. Could you tell us what is the APE growth you're targeting for this year? That's for FY23, if you could just revise that number for us. And also, what will be the VNB margins that you're looking at?
Yeah, sure. So if you were to look at the numbers, Y to date, we are growing at, on a 2-year basis, we're growing at a CAGR of about 15%. On the year to date basis, we are at about 11 to 12%. We are targeting to grow this year based on how we see things, and at the way we initially drew up a plan at about 15%. We expect the industry to grow around that time. Within the industry, there are various dynamics, as we're aware. We have listed companies. We're growing in, for quarter two, we grew the fastest among the listed companies. YTD November, our growth is largely in line with the listed companies. The sector overall, ITD has grown at about 18 to 20%. We've grown at 15% odd. On the VNB margins, we've reached last year's levels. We are currently at 26.2% for the half year ended September. And last year we closed the year at a little over 27%. We expect to close the year at very similar to where we did last year, given our merger with Exide Life and the margin profiles being different. We had mentioned that we would basically continue on a margin expansion journey after absorbing Exide Life over a span of about 12 odd months.
Niraj, in terms of just new policies overall, right? I mean, it's been sluggish for the industry overall. You had a couple of tough years because of COVID, losses. Then I think reinsurance rates have gone up because of that. And I don't think one should expect them to come off or expect any help from there. Is 2023 going to look better? Or is it going to be just a year of sort of consolidation?
So, Prashant, we put in all the factors that are at play indeed. And if you were to break up the business into three segments that we operate in, one is long-term savings, second is on the retirement side, and third is on protection. These three businesses have actually, behaved differently in this period. You rightly mentioned about COVID. There was a point in time, just pre-pandemic, where the protection business was going at a certain scale in terms of how customers were thinking about it. That kind of shot up very, very steeply over the first couple of quarters of the pandemic, given the fear factor. And then it has normalized once again. So the large part of the degrowth that you see on number of policies on account of the protection business, which has normalized to 2 years back. And given the kind of strength that we're seeing on the long-term savings business, which has grown extremely well over this period, the annuities business, which has grown very well, you've seen a significant amount of increase in the ticket size. And clearly for the industry, like you rightly mentioned, there is work to be done in terms of reaching out to more customers. It's indeed an effort that we are making at HDFC Life, and I guess we need to do so at an industry level as well. As far as the overall dynamics are concerned, things are definitely normalizing now. There was a time earlier on in the pandemic where the conversations with folks, that's reinsurers who share risk with us and help us on that front, there was a very different thought process at that point in time. Things are now slowly getting back to where they were pre-pandemic, while the full reinsurance capacity hasn't returned in terms of number of players. But definitely the two large active players are looking to get back to business very soon. So this year would be a combination of consolidation as well as continued growth. We would expect the sector to grow at anywhere between 15 to 20% this year. So that would, I think, be a fairly healthy performance along with margin expansion at an overall level.